Okay, folks, we are ready to rock and roll. Welcome back, Pat.
Hey, Rick,
Yeah,
Trisha.
and welcome, Tricia.
Hello.
Tricia, why don't you introduce yourself? Tell everybody who you're with.
Okay. So I'm Trisha Palmer with Continental Credit as your credit expert for the day.
That is going to be some good stuff. We're going to get into that in just a second. I want to just give a quick recap of where Arizona is with listings and sales, and we are seeing a blip up with buyer activity. It's up about 30%. And listings again have come down. So if we look at this week, we actually put on 2,800 new listings in 7 days, but we sold 3,400. So we, dipped down 700 more homes. So we're not getting them put on at the rate that they're being absorbed. And it's not brisk out there. It's just the activity is still churning along. And I think we'll see a change of that as we get deeper into the summer. I think either listings are going to start popping way up or buyers are going to back off just due to, really dismal unemployment numbers. So that's really looking at Arizona real estate right now. It has not changed at all this week in what we're seeing, except Pat, I thought I saw a number that applications are up 17%.
Actually, no, it's kind of they're up, but then I saw something just the other day, actually just yesterday, today, that the MBA said the application for financing new home purchases was down 25% in April. So, um, there maybe
But they're
I'm seeing
lender, the apps are going like this though.
yeah,
Yeah.
yeah. I mean, they're talking about, the economic numbers that GDP is going to decline by like 35%, and, the current quarter. And I mean, they're saying sales are declining. Refis. I mean, on the lender side, I'm seeing from like a lot of these mortgage posts, lenders, a lot of the mortgage brokers are just busier than heck. So, I mean,
Yeah.
people are trying to get, there's a new lender, one of our wholesale lenders came out with this program, believe it or not, that allows people to they can buy down their rate down to 2.5%. It's in the twos now for a 30-year fixed. Um, Basically, it's the broker's United Wholesale, and basically, if you didn't refinance with them in the last 18 months, it has to be a 22-day lock. But you can lock it 2 3/4, anywhere from 2.5 to 2 3%, under 3. It's a buy down like some other lenders do, but if you're in the house, going to be in the house for a long time, you can do a buy down and be 2.5, 2 3/4 for 30 years. And
Yeah.
they're a lender. They're actually a broker partner that's usually ahead of the game. They feel that rates are going to come down in the low threes, high twos, but they're trying to get ahead of the game and trying to get people. They're saying, let's get people financed there now, so that they don't do because what brokers what happens is if somebody finances a loan in May at say 3.5 and rates went down to say 2.5 in June or July, yeah, they can do that refinance, but the broker, I think we mentioned this maybe on a call, and this is what was causing all the issues with the lenders a couple months ago, because they're getting what they call early payoff penalties. And the people were refinancing quickly, and the margin calls, that was what's causing all this issue. So this wholesale lender is trying to get ahead of the curve and saying, hey, we'll refinance you in the high twos so you can get people there, and so they won't have to refinance ever again. But you have to buy down that rate. But it's been a brisk program. There's a lot of people that have been taking advantage of that. So I kind of get off track there, but
Well, that's a good segue into introducing why we wanted to have Trish on, because Trisha,
well, can I jump in real quick?
Yeah,
Give her
yeah.
an introduction. Sorry, I know we don't really stage this, but I just want I but I just want to say I've been using Continental Credit for the last several years. I've been in business 20 years, and it took me several years to find a credible credit repair company. Like I said, I want to give about a minute applause here to her and the company, because I've been in business 20 years trying to find a credit repair company that wasn't, scum buckets. I mean, you see some of these law firms, they start charging $100, $150 a month for somebody who's in credit repair for a year or 2 years, and they don't do anything. But a couple of years ago, I found Continental Credit. and they've been a boon to my business. I mean, they keep people updated. I get calls from the rep on a monthly basis with the status of where they're at. And I've gotten more than just a handful of people loans because of their help. Taking people from, say, a 615 to a 680, 690, 700. And they're very reasonable cost wise. And I'm kind of surprised what they charge and for what they do. It's amazing. It's an incredible value. So they've been, they're one of the best companies I've seen out there in 20 years. So
And now's the time to really start taking that seriously, because if you're not in a position to buy yet, or you're not in a position to refinance and sales are kind of slowing down, and it may, who knows where this is headed. It may get terrible, but if you're still working, there might be a great buying opportunity. So you don't want credit to stand in the way, right, Tricia?
Correct.
So how do we do this? Tell us what you do. I mean, what are you seeing out there that's kind of new, or some neat tricks and stuff that, not tricks, but the right steps?
Yeah, exactly. So, I mean, most of us have probably something that's hit our credit. Even responsible individuals, will have the gym membership that we didn't know about, or the medical collection. And so basically, credit is all on a scorecard system. And so if you have anything that's negative on there at all, even if it's really old, even if it's paid, it basically will hold that borrower down into a lower scorecard until we get those items removed. And so that's really going to be our specialty, is, basically taking out those anchors. And the way that we do that is very different from what you've seen. So a lot of times I'll hear individuals say, I'll try to do it on my own, or we'll get to that. But a lot of times they just, even if they try, they'll end up just kind of hitting their head against the wall, because it's a frustrating process, especially if you don't really know what you're doing, what to ask for. And so that's going to be the big difference, is with these negative items, we're not just disputing them, which is basically a 2-point verification. So they look at the name and the social, and it will go through that repository that basically that's how it got on there in the first place. And so when you dispute something, it's basically going to say, okay, here's Nancy, this is her social, yep, it matches, and then they'll throw it out. And so when
it really doesn't do that much, does it? It really doesn't. Just a dispute is just a dispute. Right.
And so they don't really get a lot of movement. The big difference in what we're doing is we actually do a full investigation around these negative accounts. And what that means is the creditors are required to provide documentation around these negative accounts, or legally it cannot stay on their report. And so if they come back and something's not verifiable with 100% accuracy, or they don't respond within a 30-day allotment, then it legally has to come off their report. And so I see a lot of movement on items. Kind of easier things for us to remove, we're going to be medical collections, items older than 2 years, items paid and settled, things like that. But I see movement on bankruptcies, foreclosures, repos, tax liens. I'm able to get a lot of movement on that. And just to kind of put that into perspective of what, an older item can do, a couple of months ago, I actually worked on a woman's file who had 1 9-year-old bankruptcy. So she'd had perfect credit from that time forward. And we went in, she was just trying to get 6 points to get into a top tier as far as lending goes. She was sitting at a 714, so not a bad score. But we went in, we removed that one single item. She went from a 714 to an 820. So it was 106 points in that one single item. So that, even for me, I mean, I know I do this all day long, but that even just was a good reminder of, even if it's 9 years old, it's an anchor. And a lot of times we will not really realize why our score is not moving. And it basically just capsizes them, holds them down into that lower scorecard until we get movement on those items.
So something that old, 9 years old, will affect your score?
Oh, yeah. Yep. It was 106 points in just that one single item, and she hadn't had anything since then. So, and it was just a public record BK bankruptcy. So we were able to get movement on that.
I see that a lot with people say, well, that happened 8, 9 years ago. My credit's, okay, but they think it's in the past, but that's a great point. Keep
Yeah,
going.
yeah.
Sorry.
No, you're fine. So just to give you some more examples, because I like examples, I think it just puts it into perspective. But I actually just enrolled one of my personal friends just recently, and he's been in a little over 70 days. He started with us with 10 collection accounts. One of those was a $14,000 medical collection, so he was low 500s. We have already removed all of those, including that one old um, medical collection for $14,000. And I got him set up with an authorized user, or had him get it set up, I should say, and then got him set up with a secured credit card to get the positive credit going. So we were working both sides of it. He's actually out shopping today with a 740. So, really good movement in a short amount of time. So if we can go in and remove the negative items, help maximize on the positive credit, we can really get some good movement on the score rather quickly if we're working both sides of that.
So Pat was telling me that the creditors have 30 days to document a dispute. So if I send something in and let's say I was late, I was 90 days late, really bad. And
Yeah.
so what do? I send a letter in to the credit bureau, or how does that work? And what does let's just say it's I don't know, Wells Fargo or Credit One Bank that holds the credit card. What's the process? What goes on?
Yeah, so what we do is we are one of the few companies that I know of that can generate a soft pull. And so I would collect their information. So the soft pull is going to be a pull that does not hit the credit. And so we will pull out anything that's negative on their credit at all, and including the inquiries as well, if they're enrolled with us, just so you know. And we basically will send out a full investigation to the bureaus. So we send it off in a letter, and then they open it up to the creditors. Once it leaves that bureau's office, they have 30 days. And so if the bureaus don't receive anything back within that time frame, it's automatically being removed at the bureau level. So we'll see that reflection right away. And then the customer will then get a letter from Experian, Equifax, or TransUnion saying this item's been removed, this item's been verified. And if something does come back verified, that's when we'll hit them with another round of investigations. So we have about 45 different types of investigations. Not that we'd ever have to send that many, but that we could send out around accounts asking for specific information.
So how many, I mean, is there like a percentage of inquiries that don't get responded to in 30 days? I mean,
so what we've pulled, and this was actually really interesting for me too. My boss a couple of weeks ago, he pulled from 2008 all of the borrowers that have been through our system. And even in those really low subprime, so 580s and below, we're showing 38% of those having a new mortgage on their credit within 90 days. So usually within 90 days across, any platform, I can see really good movement. Sometimes it will come off earlier than that. I have a lender that I worked with in Utah, and he sent me kind of these perfect scenarios. So, they were a medical collection older than 2 years, paid and settled on every single item. I had those all off within 45 days, and like 8 out of the 9 borrowers that were sent. So, it kind of just depends what's on there. So there are going to be certain creditors that are easier to deal with. Dollar amount plays a big part into it, because you have to look at it from a creditor's point of view. What's their vested interest to verify the information? Obviously, if it's a higher dollar amount, they have more vested interest in that particular account. So they're probably willing to take the time and money to verify. That's also where items that are paid and settled, even if it's paid and settled, zero bounce, if it's on there, it's holding them down. And so we can usually get good movement on those types of things, because if they pay someone to take time and money to verify that information, even if it was $100, it still would be $100 loss to that creditor. So it doesn't really make sense for them to take the time and money to verify if it's paid and settled. So we are able to get a lot of movement that way. And then medical's, always a good one for us as well. Do they have all the information around those things?
You mentioned something real quick the other day, Trish, sorry to jump in, but you said that, I mean, people are listening to this, or, the millions of people are watching this, as we always say. Now's a good time to really zoom in on credit repair, because you said the other day that these companies have limited staffs to verify this information. So they can't, you said you're having 25 to 30, 35% better deletions now than you did in the past because of this COVID.
Yeah, so I've been doing this for quite a few years now, and I've never seen deletions like this. And the reason being is, we send out the investigation. A lot of the agencies have closed or furloughed their staff, or they're working from home. So their efficiency and their ability to verify has gone down, which fortunately for us has increased the deletions. So we're up about 25%.
That's huge.
That's huge. Yeah. I've even seen some same day situations, which I'd never seen before, on some medical things like that. So it's definitely the time. If you have anything on your credit, now is the time to get it in and get it taken care of.
That is, I mean, if you got credit, if you want to do credit repair, do it now. I mean, yeah, because
there's nobody answering the phone on the other end, is what I'm hearing.
Yeah, exactly.
I don't have time for this crap.
That's why I wanted to get you on this call, because people got to pass the word out that, that's what I'm trying to tell people now is, okay, now is, I never, it's stuff you don't think about in this type of time frame, right? Where people get the score from 6:30 to 7:30 maybe. And typically it takes a couple of months to do credit repair, but you might be able to get that shortened up by a month or two,
Yeah, exactly. And, I've been on a few calls recently with customers where, they're a little bit worried about money. And, I think the big thing to always remind yourself is, if you don't do anything to fix it, you're going to be in the same spot 6 months, a year, 2 years down the road. And so at some point you have to step into it and do something different to change your circumstances. And so what I find is, even our costs, I can go over that too. From your referrals in, they do get $100 credit from you. So instead of the $189 that it would normally be to enroll, it's just $89. So they get that credit.
Yeah, two people would be like, a couple would be, how much is that? That's 170, I think, or 180.
Yeah. Like 158-ish. Yeah, 160. Okay. And so, if you really think about the savings, even 40 points on the score is going to be about a half of a point on interest rate, which literally will save them tens of thousands of dollars over the life of the loan.
So your fee, you're saying, is around for one individual is what? How much again?
So it'd normally be $189, but with your referral in, they get $100 credit. So it's just $89 to enroll. And then we do $79 a month after that with no contract. So if their score's up, they can cancel out at any time.
Yeah. And so basically, if it takes them, I tell people it's a small setup fee. It's $80 a month. And if it takes them 2 months, they'll be in 2 months and they'll cancel the contract. So there's no 12-month contract. Unlike a lot of other law firms in Lexington and a few other, they have you set up for a year, 2 years. And I've talked to, if I had $1 for every person I'd talked to, they said, oh yeah, I've been in credit repair for a year and a half. I'm still about the same. Because you just want to milk that $100, $150 a month from thousands of people. I mean, that's the way I look at it. But you guys get in, get your job done. People can leave you in 3 months, 4 months, 2 months, whenever the job is done.
Yep, exactly. So very, very low cost, especially considering, and hopefully you only have to ever do it once in your life to get things cleaned up. And then, moving forward, obviously with lending, PMI comes into play. So the type of home they can get, how much, DTI, debt to income, what they're going to, it's going to affect everything. Interest rate, auto loans. Insurance.
So are you seeing an increase now in people coming in for credit repair, or is during this crisis, or is it just kind of level?
Yeah. So, with conditions that have tightened, obviously even one negative item could make the difference of even making or breaking getting the loan in the first place. and then what type of interest rate they're going to get, right? So we've actually seen a huge increase in credit repair right now in the last couple of months. So that's gone up significantly, but we're seeing a lot of deletions that go with it. So it's just been working really great that way.
Oh, that's interesting. Yeah, it really piqued my interest when Pat was telling me that stuff about how they're too busy to respond. I thought, wow, that's you know, you'd think people working from home, they get, they've got time to mess with it, but they've reduced their staff, and
Yeah.
and credit card companies are just like banks right now. They're trying to cover their losses and lower their expenses.
Yeah. Yep. Exactly. So
Well,
we are able to see a lot of movement that way.
so I'm going to include your contact information below in the comment section below for YouTube. I won't put it in now while we're live. I'll put it in after it's done. So anybody wants to know how to get a hold of you, they can click on your contact information or reach out. And um, it's good stuff.
Yeah. It's really good. Good
So,
time. Good time to get it in and get it cleaned up. Definitely.
yeah, well, and you have time to work on it because you were saying before the call that you normally gone 2 or 3 times a month, 2 or 3 weeks out of the month, and now you're stuck at home. So,
Yeah.
so
Yep. And we have a really large team. So we have 250 employees I have that help me. So,
nice.
I mean, we definitely, but we're busy. We're all, I mean, we work 8 in the morning till 8 at night and just working on files and trying to get them back so that they can go out and go house shopping.
Well,
You
good.
know,
Well,
like you said, Tricia, I mean, it affects interest rate, it affects your PMI, because if you got a better credit score, if you're a 740 versus a 700, that could affect you, 10, 20, $30 a month just in the private mortgage insurance if you're only putting 5% down, probably even more.
well, it
Uh,
affects your car insurance rates too, doesn't it?
Oh yeah. Yep. I mean,
Yep.
I even had one lady, she was paying because of her credit, she was paying 950 a month for her Jeep payment. This one just blew me away. And we got her credit up. She refinanced. She went from 950 to like 430. So, over $500 savings just in one single month. And so if you
Yep.
really start breaking down when you have lower credit scores, you're basically bleeding out every which way you look. So if you can really get it in and get it improved, then it's just going to actually put more money back in your pocket every which direction you look.
It's awesome stuff.
what,
Well,
hey,
again,
can I ask you real quick, Trish? Real quickly, can you comment about a minute on the forbearances? What do you think about the
oh
forbearance
yeah,
stuff on the
So that's good. A lot of people are wondering, things are getting tight. What do I pay? What do I not pay? And what I'm saying is if you only have a certain amount of money and you have to pay something, or you have to kind of pick and choose what you're going to pay, always pay your mortgage. The reason being is with the auto loans and credit cards and things like that, we're finding if you just make a quick phone call, a lot of these institutions are willing to work with you and they'll put those payments on the back end. However, with mortgage, it works a little bit different with most lenders. So what I'm seeing is they'll give you forbearance. So you won't have a payment, let's say May, June, July, and then here comes August and it's actually becoming a balloon payment. So it's $10,000 that you have to pay. So it's not working like normal forbearance where it would go on the back end of a loan. It's actually creating a balloon payment, which I think we're going to run into a lot of issues that way. So if you can pay something, pay the mortgage, and then try to work out everything else. And I have seen on some credit reports already, I don't know if you guys have ran into this as well, but they are having that forbearance verbiage, which if they're trying to refi and things like that moving forward, um, that could be trouble for you guys on your end on the
That's what I
lending.
mentioned last week on
okay.
the call last week, as far as just that word forbearance. I mean, even though Fannie Mae, they could say anything they want, they could put that, once they put that wording on there, and they said, supposedly I heard that they're not going to do that, but Tricia, you and I both know they can say one thing and do another, and that's on your credit report. And then,
Yeah.
Yeah, the HEROES Act that's been proposed that Congress is voting on today, they're coming out and saying that they're not allowing them to put those comments in. But until I actually see it in writing, I don't know how they can do that. But Hey, guys, we've got a couple of questions that have come in on the chat. One of them is from Wally, and his question is for you, Pat. He goes, do you guys offer VOE, no loan, no doc loans?
We used to. I mean, no, they're pretty much. They were, basically non-QM, non-qualified mortgage. Not, I mean, non. What he said, VOE.
VOE, no doc loans.
No, I mean, not. Basically, you got 12-month, 24-month bank statement loans. But no, there's really nothing that I know of.
Yeah. Okay. And Tricia, we got Jared is saying, I have a 780 credit score. Would I get any benefit from credit repair?
It really just depends if there's anything that's negative on there. So in order to have perfect credit history or perfect credit, you have to have a certain amount of credit history. So that could be playing into it. But if there's anything on there, at a 780, he could potentially have something that's very old and still have that high of a score. The other thing,
780 still. I mean, once you get set above 760, 780,
right.
780, if you're 800, it's like throwing another bucket of water in your swimming pool. It doesn't really matter.
Yeah.
From my standpoint.
No, that's true. I mean, anything above that, you're pretty much going to be in that top tier anyways.
So you say, Jared, you're already perfect. Don't worry about it.
Yeah, there's some people that are 780 and they want to get over 800. It kind of probably meant, just kind of bugs them, from a a standpoint of, hey, I'm better than this, which I get it, but they're people. I like to see people are proud of their credit score, but once you're 760 and above, it's not going to give you really any more advantage, really.
Well, you're not going to put it on your online dating profile anyway.
Yeah. But no, but you're
welcome, Jared.
You're the kind of, you guys are just great though, because they said you're very proactive. You call, the reps call, say we're about 30 days through. We got 15 lines that we had to work with. We got 5 of them deleted. We got about 10 more to go. So you guys are very proactive. I mean, I said this in the beginning, for $80 a month, I don't know how you do it. I mean, it's just, you obviously work on volume, but the services that you provide, the money you can save people, tens of thousands of dollars, it is probably one of the best values I can ever think of. If you pay a couple $100 to save tens and tens of thousands of dollars, you tell me what other service or product you can do that for. It's unparalleled.
Yeah, I was surprised the number's that low. That I was thinking that your fees were considerably higher.
Yeah, we're very, very competitive. I mean, obviously, I travel all over the nation to do this, and so I hear all different things, and we're very competitive, and especially with the product that we bring, it's just second to none. It really is.
No, I can verify that though. So.
Well, that was great. I'm glad we got I learned a lot. So, well, Tricia, thanks again for joining us, and Pat for inviting her over. Because I think this is a great time right now to look at credit repair and get ready, because, we don't know where housing's going, but if you can imagine a scenario where, you're not in a buying situation right now because of bad credit, and we have any kind of dip in prices and you've had your credit repaired, this could be a golden moment for you.
Oh yeah.
Tricia, can we have you again, just to maybe, it probably wouldn't hurt to have you back in maybe 3, 4, 5 weeks, do this over again, just so people maybe haven't caught it, if that's okay.
Oh yeah.
Would that be okay, Rick? Or does that sound good? Or?
Oh, absolutely. Yeah. Well, another follow-up question real quick from Wally. He's saying, what are the requirements for the bank statement loans? I have about a 730 credit score. The thing is, my taxes don't really show enough to qualify for a loan, but I make about 70K a year as a truck driver. So he's writing everything down, right? So.
Yeah. I mean, basically, you could do, there's obviously, it's tough to explain in a couple of minutes, but 12 months bank statements, those programs really kind of went, I mean, they're starting to, about a month and a half ago or 2 months ago when this hit, Rick, remember, I mean, the non-QM, the non-qualified mortgage, which that qualifies in, it's the, qualified is basically conventional FHA, and the non-QM is bank statements and 6-month bank statements, 12 months bank statements. Basically, what they're looking for is 12 months, but they are coming back a little bit the last week or so. I'm starting to see them come back out of the woodwork because they shut that down about 2 months ago. And they said, we're done with it. We're not doing it. But I think there's some companies creeping back a little bit. It's still going to be a little precarious as far as the program, but they look for 12 months. They look at your deposits on your bank statements. You consistently make $6,000 or $7,000 a month in deposits, monthly deposits is what they look at. And then they average those. So that's basically your pay.
So
And then,
I'm just going to jump in and say, Wally, you can see I shared Pat's contact information in the chat there. So maybe reach out and give him a call.
yeah, be more than happy to talk to him and see what, where he stands. So,
All right. Well, everybody have a super weekend, huh?
all right.
Yeah.
Hey, Tricia, thanks a lot. It was
Thank
really good
you.
information.
Take care.
Take care.
Okay.
Bye-bye.